Investors woke up on Friday with news of another armed conflict in the Middle East. Israel attacked Iran at over 100 locations, mainly targeting its military and nuclear infrastructure. Food prices went up by 10%, while global equity markets came down by 1 to 2%. As an investor, what does this mean for you? Equity markets, just like our investors, don't like uncertainty. When geopolitical tensions are high, global trades get disrupted. It's a risk for the equity markets. Any conflict in the Middle East is just not a regional conflict. It has implications worldwide. The Middle East is the artery for the global oil trade, especially the Strait of Hormuz, located between Oman and Iran, counts for 35% of the global oil trade every day. On Friday, crude oil prices went up by 10%, which led to inflation fears around the world, as crude is a key component for many products as well as for petrol and diesel in our daily lives, especially for a country like India, which is dependent on oil import. India imports 85% of our oil needs. So when crude prices go up, that leads to a direct impact on our import bill, which can be negative for our economy. The last time we saw such panic in the crude markets was during the Russia-Ukraine war. However, it's not fair to compare that situation here, given that the probability of a ground armed conflict is very low. Even in the past, when such conflicts have happened, it has had a very short-term impact on the equity markets as producers, consumers, and equity markets adapt to the new situations very fast. So as an investor, stay invested, continue your SIPs, and look for opportunities to add into this market as we are still in a very bullish cycle. And keep following Abhiyaan Wealth to improve your financial health.